Today we will take a walk over on the dark side of investing because great opportunities await those who are morally flexible right now. Because in this video here I'm gonna share with you our in-depth analysis and outlook with all scenarios and target zones on 3 companies out of the pharmaceutical sector. So if you want to build a healthy, diversified portfolio and you do not shy away from pharmaceutical companies, stay tuned, we're jumping right in. Hello and welcome to another video by HKCM Global. My name is Joe and today we are gonna dive into 3 companies out of the pharmaceutical sector, 3 companies that we analyze on a daily basis out of the over 200 that we analyze on a daily basis. And if you don't know about it and it sounds interesting to you already, link down there in the description. But no matter if you're subscribed or not, here in this video right now I'm gonna share with you our outlook on Roche, Bayer and Novo Nordisk. I'm gonna give you target zones and all our scenarios, so trust me, you do not want to miss that one. Because if you are an investor that wants to morally evaluate every single company that he invests in, I don't think you are watching because you probably never even clicked on that video. But if you are of the belief, which I for example am, that to build a healthy and diversified portfolio, it is just merely unavoidable to also include defense companies, so weapons manufacturers, and also pharmaceutical companies that sometimes really play dirty business and profit off of the sickness of other people. But yeah, I believe for a healthy portfolio, it is unavoidable. And so for every weapons manufacturer, there's also, of course, the case of enabling a country to defend itself. And so, of course, for every single dirty business and profiting off of sicknesses by some companies, there's, of course, also the huge flood of drugs that are being produced that change lives for the better. That's at least my view on the topic. And so without any further ado, let's jump right into the first of the companies that I brought here for you, which also has had quite a run over the last couple of weeks. So this is an interesting one already. And also a company that has been sitting in my portfolio for a number of, yes, sadly a number of years. Would be better if I could finish this sentence by saying a number of months, but it is a number of years, sadly. What am I talking about? I am talking about Bayer, because Bayer, if we just take a little trip back in history, you can see that back in 2015, Bayer established its all-time high at roughly 142 euros. This one here is a company that we trade and analyze on the Xetra stock exchange over in Germany. So this is why this is prices in euros. And so following this all-time high in 2015, we saw an B correction, and then investors probably hoped and thought that this could be a short C wave correction here, just super healthy, regular market action, nothing to worry about and something that has to be expected in every up move. But then during this time here, when it was just about time to bring the C wave to an end, maybe even a short truncated C wave here to an end, Bayer decided to make a brilliant decision. And yes, maybe you can already hear the irony in what I'm talking about, because back during that time, Bayer decided to acquire the American company Monsanto. And you've probably heard that name. And if you haven't, Monsanto is a company that is considered by some people the devil personified, because they have been making huge headlines and have been facing one lawsuit after the other because of their practices in business. They, for example, sold Roundup Ready corn, which was corn that was completely resistant to their pesticide product Roundup. So they first of all sold this pesticide Roundup, which consists out of mostly glyphosate as its main actor, and then they sold Roundup Ready corn, so corn that farmers can plant on their fields and that is completely resistant to Roundup. So they can just spray their field like crazy with glyphosate and still have healthy crop in the end. However, glyphosate turned out to be rather unhealthy. And so over the last couple of years, there have been quite a few companies that banned it completely. And there have been legal cases in the United States of hundreds and thousands upon people that claimed their exposure to glyphosate caused them cancer and sued Monsanto big time. And so yes, brilliant decision by Bayer to acquire Monsanto, because ever since the acquisition of Monsanto by Bayer, all of those legal battles of Monsanto now are legal battles of Bayer as well. And so as you can see, what followed from this acquisition was a bear market for the last 8 years. An ongoing bear market where in the top we lost, and just from this moment, right? Just from this moment, we lost 80%. I'm not even talking about the whole drawdown from the top, because from the top, what did we say, about 144? From the top to bottom, we lost a total of 87%. So from 2015 to 2025, 10 years later, only a tenth of your portfolio left if you had put your money in Bayer. So not a great investment at all whatsoever. And so every single bear market at some point has to come to an end, right? So either the company goes broke or they manage to turn the operation around and turn it back profitable again. And so we have had this long-term entry zone with the pivot for the bear market in Bayer. We have had this target zone on the chart for a long time. And just as of recently, we deactivated this target zone because we experienced quite a nice rally here for Bayer. And it becomes even more apparent if I jump over here to the 1 hour time frame. This before was the day chart, so every single candle being 1 day of trading action. And here we have one candle being 1 hour of trading action. And so starting out of late November of last year, we really saw a nice and healthy rally here for Bayer, which right now boasts around 70% of gains already in just a mere 2 months. So that really is something to brag about. And it once again shows how brilliantly those target zones, especially our long-term entry zones, work sometimes. Of course, it's not 100%. No analysis matter out there is 100%, but more often than not, these target zones just work brilliantly, especially the long-term entry ones, as is the case here with Bayer, for example. So if you have missed this entry to the stock of Bayer, because as you can see, our projection for Bayer is rather clear. We see a prolonged, yes, corrective, so we're talking about only a Y wave here. So overall, we still conclude the price action to Bayer here as in forming a WXY corrective pattern, but still in this next move for Bayer here, in this wave Y, only from current levels, we see another 260% of gains to be made. And especially if we look here on the short-term projection, we see the price action as already nearing a mid-term top, and we see another corrective move coming in here in the undercount to this large Y wave in another X wave here. So if we just roughly estimate that, we could be looking at the area between 38 to potentially 34 euros here. That of course increases then our total potential here on the upside all that much more. So starting out of this area here, which the X wave could potentially pivot. And again, please do not take these price levels as mere gospel. We will define those targets more clearly as we move along in our daily updates that we send out to every single paying customer. But just as a rough estimate, right? So starting out from 34 euros here up until the top for the wave Y, we're then not talking about 260% of gains, but we're talking about roughly 370% of gains. So all in all, looking pretty promising for Bayer then. Next company that I brought for you, the chart action here is quite a stark contrast to what we just saw in Bayer. And it's not a German company, it is a Swiss company. Company is Roche. And what we see for Roche is a bit of what Bayer already has behind it. So overall, likewise, we see the stock of Roche here as forming a large WXY then to follow here corrective pattern. But of course, in this structure, Roche is still way behind. So Bayer already is past its low, past its pivot point here for the wave X, and Roche is just in the very middle of even yet forming this wave X here. And so we conclude that Roche is right now just mere millimeters from our short target zone. And in this case here, because it is an imminent target zone here for Roche, meaning the price action can now move into the target zone and trigger the short signal every day. I sadly cannot share the exact price levels here with you, but you can see that we are just mere millimeters away from this short target zone as being triggered. And what follows from here is not all that funny altogether, because we project here a 67 to potentially 70% sell-off altogether in this wave C to finally then conclude the overreaching wave X here. So not a good outlook for Roche whatsoever. And if we then quickly jump here into the direct undercount, so coming out of this wave A here back in April 2024, this exact same wave A low here in April of 2024, we have so far seen a W, X, Y corrective pattern that should then come to a pivot point here in this just mentioned target zone between the 61.8 FIB and the 88.7 FIB. So this really is the last resort for this pivot high here for this corrective B wave. So altogether not very promising here for Roche, but of course could be very profitable if you also do not shy away from shorting such a company. Super profitable outlook then here. Otherwise, if you're just a mere long investor, take it as a cautionary warning. But of course, as always, this is no investment advice. This is just our analytical opinion based on the chart patterns that we see here unfolding. And then last company for today, the big one, the infamous, the one everybody is talking about and everybody is screaming about on how undervalued it is, Novo Nordisk. If you are deeper into the investment rabbit hole, you probably are aware that there's voices left and right screaming on how undervalued and how cheap and what a no-brainer an investment in Novo Nordisk is right now. But those voices have also been screaming back here. Those voices have also been screaming back here. So naturally, those voices have been doubling down on their claims with every new low that we made here in the stock of Novo Nordisk. However, we have positioned ourselves a bit more cautious here. And if you have been into the stock market for a number of years, of course you are aware that if a company corrects down 60% after such a strong upswing that you saw here, of course, this same company can also correct back down 73%. Or if it has already made a 73% correction, it can then, of course, also correct down even further to maybe even 80%. And yes, sometimes it can be surprising on how irrational the stock market sometimes can be, but it's also quite surprising on how long the market can stay irrational sometimes. So with other words, as the age-old stock market wisdom goes, the market can stay irrational for way longer than you can stay liquid. Just a short wisdom that continues to prove itself right time and time again. So real quick, our long-term outlook before we jump into the short-term outlook, which there is quite a bit of action here for you and quite a bit of free value that I can share here with you. But real quick, long-term outlook for Novo Nordisk. In our main scenario, we see the price action as not yet finished here with the long-term low and sustained low for Novo Nordisk. Yes, of course, long-term, we see a rough potential for Novo Nordisk at 1,000% of gains in the next upcoming wave 3 move. But overall, we do believe and we do clearly see in the market structure that probably we have to make another lower low. So from current levels, we would be talking about roughly another 50% correction up until the optimum target zone here, perfectly in the middle between the 78.6 FIB retracement and the 88.7 FIB retracement. And yes, here I'm sharing completely for free with you the exact target zone. So we're talking about 1565 on the lower boundary and 2963 on the upper boundary. And again, this is euros because we trade this company here also on the etc. So the stock exchange in Frankfurt, Germany. And if you want to trade those exact price levels, please be careful and check whether you also have this stock at this exact same stock exchange or whether you have it as listed on another exchange where it's probably nominated in Danish crowns. So then, imminent price action and substructure to Novo Nordisk coming out of this low here back in November, December 2025. So this is this low here with this final little peak down. We are right now really in a complicated substructure here because overall in the main primary scenario, we clearly do believe that we have formed a substantial low here with this wave Y, and we are right now in an A, B, C correction to follow, completing this wave X corrective move here. But in this case, we also have this alternative scenario of the top that is here marked as the wave A top for the main primary scenario. This could also be an alternative wave X top already, meaning that following this alternative wave X high here, we could see a wave Z to directly fall through and fall below the support at 32.36 euros and directly take us into our long-term target zone. We currently have this scenario at a 34% probability, so a rather low probability, but it is a probability nevertheless. But in our primary scenario, we do see the price action as right now being in an 1, 2, 3 as the direct undercount to this 1, 2, 3, 4, 5 substructure here. And what you can see here on the chart is something that is rather uncommon in our analysis, because we do have a long-term entry here in the middle of a substructure which we view as a corrective substructure and only as part of a corrective rally that should later on be corrected even lower, and where we will see even lower prices in our direct main scenario. However, it is always a game of possibilities and of taking chances in the stock market. It is never 100% probability. And looking at this chart here for Novo Nordisk, we have been in this correction for a long time, and we have been in this correction with almost no major setbacks and relief rallies whatsoever. So if you have a company with strong fundamentals, as you have with Novo Nordisk, and you saw a prolonged corrective action with basically no longer and sustained relief rallies whatsoever, of course, there is a lot of pressure that wants to unfold and wants to explode higher. So in this case here, that's why we have decided to bring a long-term entry zone here on the chart already, because if that was the case, we would not want to miss out here on Novo Nordisk. And so even if our primary scenario comes to fruition, we could already still see midterm gains here in Novo Nordisk of roughly 60 to potentially even 90% all the way in the top. And what we then do with our profits, that's something completely up to you, of course. If you want to take profits because you firmly believe in this primary scenario, or whether you say, you know what, I'ma just pull my stop loss a bit higher and then ride the wave and see where it leads us, that is something that our analysis cannot tell you, because there is a distinct difference between portfolio management and analysis, and you have to have both. By the way, for our paying subscribers, we do offer both. So if you want to take up our offer with the link down there in the description, you will not only get daily updates on all the markets that you have purchased, but you will also get a full portfolio management for all of our stock market packages, meaning entries, exits, trailing stop losses, of course, taking profits along the way. You will get all of this. So if that sounds at all interesting to you, check out the link down there in the description. And up until then, see you in the next one. Take care.